Let's talk earnings. Maybe we should just go through the list here. We just heard from GE. We've got UPS on the list. We've got 3M on the list, and we've got Pepsi on the list. Your big takeaways, is there one that you think is more meaningful than another at this moment?
So I think Pepsi is interesting because just like Coke, they said, look, we're able to pass pricing on. Their organic growth actually went up from 6 to 8%. And I think they're saying the consumer is still strong for branded products. That's kind of been the theme going into this quarter as to what the consumer is going to do. So consumer is still strong. Question is, how much more can they pass it on? So right now, and even though these stocks are trading in the 20s multiples, they're still there. Coke had a great earnings report. Pepsi is buying back more shares and has increased cash flow. I think the interesting part also going forward, you guys were talking about 3M. You look at GE. GE did say we're going to hit the lower end of our earnings. GE is also a very complicated story like 3M in the sense that they're breaking up into 3 different groups. And when they broke up their businesses, they did highlight that although they are seeing strength in healthcare and aviation, the power segment, really mainly the wind, is a little bit weaker. So I think if you are not performing on all cylinders, you are going to, in the short term, get hit. And you could see the stock of something like a GE pull off. UPS had good earnings, strong. I think that's going to be good for freight and logistics. Everybody's been very cautious, especially in the last month. So I think this is going to be really telling. Things we're going to look for are, hey, who's passing the pricing on? Who's able to keep their margins going forward? Becky was right. It doesn't really matter what you did for me in the last quarter or 2 quarters. We're kind of in a new ballgame now with rising interest rates, a slowing kind of global economy, and companies that can really differentiate themselves are going to actually either keep their stock price going up higher or actually not get killed by the market.
We've got big tech on deck later today. We're going to be hearing from Microsoft. We've got Apple later this week. Where do you think those are going to land, and what do you think that means?
Those are going to be really important for the stock market, Andrew. Microsoft and Apple and Google, although they are all down for the year, have not been taken to the woodshed like some of the other stocks. I think if they show improved sequential growth, margins improving in cash flow, these kind of become the safety stocks, like we talked about the consumer staple stocks like Coke and Pepsi, of the technology stocks and really of the index. I mean, they're still a big component of the index. But if they actually talk about a wavering kind of global growth and secular growth declining, you could see a lot of more money coming out of technology, especially you've seen what's happened to the PayPals, the Facebooks of the world. And I think they're going to be meaningful for the stock market as a whole, especially for the indexes. Maybe not for individual stock pickers, but because they make such a big component, it will be very interesting to see.
It sounds like you're a little bit bearish, though, about that. And I'm curious if you turn out to be right, whether in a very perverse way that is helpful to the Fed in terms of not having to slam the brakes as hard as maybe some people fear could be the worst case.
I mean, in a way, that could be helpful, but I don't think you're going to see that right now. I think the Fed is on, route to raise rates, and if the market does come down, maybe it doesn't raise it as fast as possible. But I do think I am a little more cautious this time on tech because the expectations are so high for some of these big tech companies. And if they don't hit them, given kind of their market size and the amount of cash flow they produce, because they even talk about hints of corporate spending coming down or consumer kind of slowing down, I think the multiple contraction you're going to see, it's not that these companies aren't producing great cash flow and earnings. It's just a multiple story at this point with headwinds and rising rates. So you could see the market kind of pull back on those.
Shepard Smith here. Thanks for watching CNBC on YouTube.